day, today I present to you the second edition of Golden Way's Business News. In this episode, we'll talk about gold demand trends Q1 2021, gold technical analysis and gold price prediction for next 3 months. Strengthening consumer demand mitigated the impact of ETF outflows as global economies continued to recover. Q1 gold demand, excluding OTS, was 815.7 tons, virtually on the par with Q4 2020, but down 23% compared with Q1 2020. While the average gold price in Q1 was 13% higher year-over-year, it declined by 4% quarter-on-quarter. The opportunity to buy at lower prices relative to the highs seen last year boosted consumer demand, particularly as many markets continued to emerge from lockdown and economic recovery lifted sentiment. Jewelry demand of 477.4 tons was 52% higher year-over-year. The value of jewelry spent in $27.5 billion was the highest for the first quarter since Q1 2013. Bar & coin investment of 339.5 tons plus 36% year-over-year was buoyed by bargain hunting, as well as by expectations of building inflationary pressures. Growth in consumer demand was offset by strong outflows from gold-backed ETFs, which lost 177.9 in Q1 as higher interest rates and a downward price trend weighed on investor sentiment. Q1 saw continued healthy levels of net buying by central banks. Global official gold reserves grew by 95.5 tons, 23% lower year-over-year, but 20% higher quarter-on-quarter. Gold used in technology grew 11% year-over-year in Q1 as consumer confidence continued to recover. Demand of 81.2 tons was just above the 5-year quarterly average of 80.9 tons. Gold technical analysis. First, define global trends in the gold market. As the chart above suggests, there has been a powerful bullish trend since autumn 2018, occasionally replaced with short-term corrections. A breakout of resistance at $1,370 on growing volumes was one of the key events in the price development. Now, the level serves as the strong support level. Despite gold's impressive price growth, trending volumes are gradually falling. That's a leading bearish signal, that first indication that the current trend will probably end. Sellers another called with the doji candle formed at the historical peak of $2,075 in August. That level is now a severe obstacle for the buyer. The latest key event on the first month time frame is the trend lines rates in March 2021. It's another signal for a bearish reversal. Gold price prediction for next 3 months. To make a 3-month gold forecast, look at the weekly time frame. The chart above shows a hidden bullish divergence between the MACD indicator and the price chart. RSI is near the oversold territory's limits. Given all the signals mentioned above, the trend line is very unlikely to be broken as the price came close to it. Thus, the gold price won't probably rise dramatically in the nearest 3 months, but a sharp fall is unlikely too. The Bollinger Band's projections suggest that the future price will most probably be located at $1,370 or $1,960, aiming to retest the upper limit. I can't exclude the price movements beyond that area, but the historical high of $2,075 is unlikely to be updated considering projected growth. See you in the next issue of Golden Way Business News.